think it's a little bit higher than what the street was working with. The crucial factor is, what do you do with this money? The market capitalization of the company is much less than the money that you're receiving. You're going to be receiving more than 9,000 crores. So two aspects I want to know. One, how much of tax would you be paying on this money that you'll be receiving? And post-tax, what is the money you have in your hand? And secondly, shareholders will be waiting. What do you do with this money? Do they expect something back?
Great questions. And, I had to play the Rahul Dravid role at that point of time. You understand it is UPSI, right? So I had to complete all your questions. Look, this industry is pivoting right now. There's a lot of technology being infused. So we are not really looking at this being the traditional BPO that we started off as being. So we'll lead with technology. And that means growing this practice through many incubation centers that we have been growing organically, as well as going out to look at interesting buys that we can get in this space to give a leg up, because speed to market is all about getting on the technology bandwagon. So I would say the strategic shift for the company would be towards technology-driven services. That's what in the customer experience space. So I'm not going to go into traditional technology. In the customer experience space, which is our bread and butter, we're going to lead with technology, and that's going to need sufficient amount of capital. That's what this is going to be invested for.
So Partha, you wanted to be Rahul Dravid. We ask you to be Rishabh Pant now. Go ahead, hit it out of the park. Please tell us. Shareholders want to know, of this 9,000 plus crore that you're getting, how much of that goes back to them? How much of that will be used in the business itself? And
what's the taxation as well? Out of 9,000 crores, you'll be paying 25% tax. I'm bowling again. I went back to the run-up and I said, let's throw it back at you. Go for it.
Look, I think it will be... we've tried to do it in a tax-efficient manner. So I think it will be about 20-25% tax, as you just said. And so far as return to shareholders is concerned, obviously, the whole thing has been about unlocking value for the shareholders. So as of now, in terms of how much money do we want to return to the shareholders, that's still a deliberation that we have to do with our board to understand what exactly would be the cash needs. We are a cash-rich company. We generate a lot of cash. So we don't necessarily need cash to run our operations. So it will be used for investments, and post-investments, what do we do with this cash? How much do we return is something I need to hold on to my horses a little bit more. I can't play all my cards right now.
All right, so you're going back into the Rahul Dravid mode. Let's bring you a mix of both of them. Let's talk Virat Kohli now. Let's talk about the business that remains. This business was what, 55% of your overall revenues. So of the remaining business, what's the margin profile like, and what rate is that likely to grow at?
So let me just correct you there. The business that is left is about 47% of our revenue.
Okay,
got it.
Okay, and that's got an improving margin profile. It's obviously not as good as healthcare, but it's got an improving margin profile. So we do see that business being very attractive going forward as well. So yeah, that's what we're going to invest in. And we did an acquisition in the technology space in 2018, a small company called Element Solutions. So we're going to do a little bit of what I would call string of pearls acquisitions to build our capability in the technology space, but in CX, which is customer experience CX. That's what the plan is.
Okay, all right. What's the difference in terms of margins between the healthcare and the non-healthcare?
I would say about 500 basis points.
500 basis points. Okay, all right. Also, if you say that you're going to be focusing on this business that's left, what growth rate can you guide for that? Will it grow in double digits?
We'll try to hit that number. Yes, that's been our track record. Actually, we've been growing in double digits for God knows how many years. We've never missed the double-digit growth. We'll try to grow it at that rate. Yeah, it's a little future-looking. I'm aware of that, but yeah, we'll try to grow at that rate.
I'm just trying to do some quick mathematics here. Last year you did around 14%. You're saying the difference between both the businesses is around 500 basis points. Now, that would mean no. The remainder of the business, I would think, is in single digits in terms of margins.
No, it's improving. I told you that.
It's improving, but as of now, going by, mathematically, it would mean that it's either in high single digits or it's nearing double digits. A very, very rough number.
Yeah, I think it is in double digits already.
Okay.
All right, so we will keep an eye out on that. But, just to go back to this business decision of yours, what was the reason to sell? Healthcare was growing well. You are a net cash company. Can you explain the strategic rationale for this? Yes, we do understand you want to go ahead and, move into the tech, non-BPO kind of businesses and all of that and stuff. With this kind of money that you're currently getting, will it be, deployed efficiently? That's the biggest fear and hope that shareholders have.
I agree with you. Look, we clearly did this to unlock shareholder value. One of our struggles have been to get the Indian stock market to realize the value of this investment. So we clearly saw that at some point of time, we'll have to unlock the value of this business, we'll probably have to list abroad. And that's a very complex process, right? So we looked at some other options, and that's how this thing came out. The only reason for doing this was to unlock shareholder value, and you've seen the results of that.
Are you done?
How to deploy the cash?
Yeah.
Sorry.
Yeah, go ahead.
Now, how to deploy the cash? I think I touched upon it. We will have a mixture of organic growth. We have some incubations on technology that we're doing right now, and it will be driven by M&A as well.
Assume that it's 100 rupees. How much of that would be returned to shareholder value? I'm not asking you how much would you use to grow the business, how much of it would be used for inorganic growth or the likes. How much of it could the shareholders hope for back? 20%, 30%, 40% of that? Because as you've been mentioning, you're looking at unlocking share value. And the stock price has really run up in anticipation of this deal. So how much of the money could they expect back?
I think the shareholders have really been patient with us.
Yes.
So I do appreciate the patience that they have displayed with us. So we will try to be as generous as possible, but I won't be able to give you a specific number because I don't think that's proper for me without having this discussion with the board. And I understand one thing, I don't want to, we have to close the transaction. That's our focus right now. We'll have to close the transaction in the next 90 days, and that's when the cash comes in.
Right.
So all of this is work in progress. I'll be jumping the gun if I gave you a different number right now and say that, okay, this is what we are planning to do.
Final question from my Partha, final question from my end before we let you go. Your current revenue profile from last year was close to around 5,900 odd crores. The EBITDA that you did was close to around 700 odd crores. Now you're losing a large chunk of that, assuming that you're doing double-digit margins in your existing business. Your revenue profile would be around 3250 crores on the top line, 325 crores in the EBITDA at the EBITDA level. How long before you reach FY21 levels with your existing business and growth initiatives?
I would say 2 to 3 years is what we will take.
Okay.
Yeah.
And final question, what about the ICDs? The last con call as well, there were a couple of questions out there. If you could give us some clarity out there, what are the outstanding ICDs and how does that get resolved?
We are cash surplus, right? We have to deploy that cash to get some returns. By deploying those cash in group companies whom we know very well are owned by the promoters themselves, who are the promoters in this company, we have two things. We have a safety factor of knowing that it is with promoter group companies who are well managed. Two, we get higher returns than we would get if we were to keep that in banks.
So then give us
money in the bank. We did keep money in the bank and that got frozen for 60 days because we couldn't pull it out. That really scared us. And that was the first time that we did ICDs.
Okay. So what is the quantum of the ICDs that's currently outstanding to the promoter? And since they're giving you all better returns, we would like to know what are those returns in percentage terms?
It is about 100 to 150 basis points better than what you will get from the market.
And the quantum is 360 crores or more?
Yeah, approximately that number. Yeah.
It's been good speaking to you, Partha. Thanks so much for stopping by. Congratulations on closing out this deal.